As always, this is for educational and information purposes only. It's your trade, your responsibility, so let's keep going. Things are getting a little more serious in parts of the market. We can see that today very much a tale of Nasdaq, which is very disrupted. We're seeing software continue to get absolutely smoked. Names that I've liked, like Snow, Datadog, getting absolutely hammered. Palantir, the one outlier in the data space there because they had great earnings, and probably my guess is that they probably have a little bit of resiliency because they're involved in the government. The government's going to want is always going to want to have them do things, especially if this agentic AI stuff gets out of hand, which it could very well do. We can see here further erosion in the coin space, crypto really just getting absolutely smoked. And not that that's a great tell, but it never really rallied when it should have lately. So unfortunately, there's more deleveraging going on there. We can see Microsoft is really the weak one of the bunch, unfortunately. And then even the ones like Amazon, Meta is just, I don't know why Meta rallied so much. I suppose the numbers were really good, but it's filling that gap right now. And even the Nvidias are coming off IWM, where we're seeing a move back into the real things, right? So the PWR, GEV was up about $40. It's unchanged now. PWR was doing well. So what happens is basically when the sell-off gets serious enough, then you get a little bit of a contagion effect. So people have to start selling the names that they've done well on that even can be hedges. Look at what's happened to the XLP. I put out, I told members a couple of weeks ago, I said, listen, this is cheap. These are cheap options given the potential for a move in staples. And here we go. There's that giant move. I have to admit, I didn't put much on, but here we go. Massive, massive move. These options were underpriced. I got the metrics from Goldman Sachs. They were saying this is probably underpriced. And that was a great bit of research there. So there are places where people are going to hide. Look at what Walmart's doing today. But really, ground zero here for this new reality of ours is, as I've been talking about for weeks now, I hope you guys have been watching, I've been saying software is absolutely going to be affected, and in a durable way, because there's no question some of these companies are going to figure it out. But the problem is right now, you've got the Moltbots, Claude-bots, OpenClaws doing stuff, and it's really freaking people out because the sort of implication is that in a few years from now, we could be seeing continued disruption in that space, right? It's not that those companies aren't going to put out good numbers probably, over some time, but the question is, are they going to continue to maintain those accounts? Are companies going to be able to continue charging people $20,000 a seat? Because they've done a process for them for 20 years. They've accomplished something that most people can't do themselves. So that's where the sales forces have come in and said, listen, we've figured this out. We've coded it. And now you get the result. You get the tools because you can't code or you don't have time to do that. Well, guess what Claude can do now? Claudebot can code something in 3 minutes, right? So software does not have the barriers to entry that it used to have. Now, it's very simplistic to say that, a company is going to get rid of their sales force because somebody in the mailroom has figured out how to do a client managed CRM software. It's not likely going to happen, right? So we're going to start to see where these companies, especially the strong ones that have very deep relationships, are probably going to weather the storm to some extent, and we're going to see a great trading opportunity at some point here. But I have been adding, because the problem is QQQ, if we look at the Qs right here, they're starting to knock on the door of this trend line. So we've seen this trend line really hold, and it could very well hold, but my worry lately, as if you've been watching my videos, I've been saying there's a possibility that the contagion sort of spreads to encompass the belief that, well, if this is extremely disruptible, what if other things are very easily disruptible? So I know that's going to be a little bit of a stretch because software is clearly the most disruptible thing, apps, things like that you can just suddenly make now very quickly. That's different from replacing other more tangible things. So, I think they're going to come to a realization that things are probably generally okay. I'm still very positive. I think there's a broadening that continues, and I think people are going to move into other parts of the economy that are now the users. As I've been saying for months, these are the users and the beneficiaries of AI in this phase. We see the boots on the ground. The companies need to fix things, upgrade things, build things. The Caterpillars, the Deeres, the Dow Chemicals, the stuff, right? The stuff that you can drop on your toe, like copper and silver and things like that. Those companies are in the right position for a build out around the world. The companies that are much more disruptable are the tech companies, right? So I've been adding downside protection in the tech area because that's where the vulnerability is, right? And you can see here that even SMH, which has been a very strange kind of, we've had a strange rally because we had a lot of stocks. Like look at Qualcomm, which I kind of liked at one point. I mean, this is sort of the small AI in your pocket, AI at the edge, smaller applications. There's geopolitical issues with some of these stocks as well, so we can't just paint them with the same picture. But the companies like Micron have done fantastically well, SanDisk and Western Digital, because there's a shortage of those chips. And ASML has done very, very well. They make those massive machines, wafer machines, but there have been some companies that haven't done well. So, and NVIDIA really hasn't gone anywhere. It's down a little bit over the last 6 months, probably. So it's been a very bifurcated market. So what you're seeing is in tech, whereas for a couple of years there, it was like, everybody wins. Tech is everything. AI is everything. You can't lose. Now they're even bifurcated, even within the Mag 7. Microsoft getting crushed versus Google doing great and Amazon doing okay and Meta starting to recover a little bit, although it's pulled back here. So that's bifurcated. And then elsewhere, you just have the software sector that I warned people on Twitter. I warned them around 102, 103. I said, I don't understand why this thing's not down more. And here we are. It's been absolutely smoked since then. And I keep arguing with people and they're saying, no. You can't look at cash flow right now. We don't know what the future holds. And I'm not saying these things don't recover and do well at some point. I'm saying uncertainty is the enemy of stock markets because we have no way, as I was saying 6 months ago, I said, we're going to get to a point with AI where we don't know what the future looks like, right? I said back then, analysts are going to look at things and go, I have no clue. I don't know who's disrupting, who's the disruptor, who's the disrupted. Where are these numbers going? I can't draw any parallels to anything that's been like this, that's been so disruptive as AI is to some of these bottom lines and moats, these moats that have been, kind of big and wide for a long, long time for many companies. This is an absolute disrupted market right now, and I'm worried that it's starting to smell some broader implication from that, which is, hey, listen, if we start to see companies being very vulnerable, and this is don't get me wrong, this is going to have knock-on effects. These companies borrow, they have lenders, there's some private equity kind of, this could catapult down into the private equity area even deeper, into the startup area, things like that. A lot of startups are like, well, how do I turn AI into a bit of business and a bit of software? Well, that's going to affect that area as well. So there are knock-on effects and repercussions from something like this potentially getting worse. I don't know if it gets worse. I'm not a bear. People think I'm a bear. I've been a gigantic bull for the last few years, especially in the last year and a half. But I'm looking at this going, the disruption is starting to sink in. And I think you have to be very cautious, or at least have some hedges on that are going to make sense here. And if it's a complete false emergency and things just go back up again, then, that's great. But the problem is we are in a very big question mark kind of environment right now. So I hope that helps you guys, and we'll see you in the next vid.